जो कि ग्लोबल कॉन्फ्रेंस में अपना संबोधन दे रहे हैं। पहले उन्हें सुनते हैं, फिर बाजार की बात करेंगे।
These include, as is well known, capital adequacy requirements, asset classification, provisioning requirements, even dividend distribution and liquidity management framework, etc. In addition, the Reserve Bank also periodically deploys macroprudential measures to address system-level buildup of risks. As a consequence of the measures taken by the Reserve Bank and the banks themselves, I must mention here, the Indian banking system has remained resilient and has not been affected adversely by the recent sparks of financial instability seen in some advanced economies. This also comes out clearly in our recent stress test results. The gross NPA ratio, that is the gross non-performing asset ratio for the scheduled commercial banks in India, was 4.41% at the end of December 2022, down from 5.8% on March 31st, 2022, and 7.3% as on March 31st, 2021. The CRAR at 16.1% at the end of December 22 is also much above the minimum regulatory requirement. Macro stress tests for credit risk indicate that scheduled commercial banks would be able to comply with the minimum capital requirements even under severe stress situations. Nevertheless, recent events in the banking landscape of the United States and Europe suggest that risks for an individual bank could crop up from segments of its balance sheet which might have been considered relatively safer. Hence, we expect the management and board of directors of each bank to continually assess the financial risks and focus on building up adequate capital and liquidity buffers even beyond the minimum regulatory requirements. And this is required for continued resilience and sustainable growth of individual banks and financial entities. Now, turning to operational resilience, let me say that operational resilience would mean that a bank should be able to deliver critical services even in face of disruptions. Cyber risks and possible cyber attacks are on top of the list so far as such disruptions are concerned. Cyber risk has been identified as the foremost in top 10 operational risks for 2023 based on a global survey of financial institutions. The Bank for International Settlements, that is BIS, while revising the principles for sound management of operational risks in 2021, introduced specific principle on information and communications technology, that is ITC risk management, reflecting the importance of this risk. Robust IT and information security governance would help in increased predictability and reduction of uncertainty in operations, minimize losses from information security related incidents, and enhance operational resilience. Given the extensive level of outsourcing being done by the banks and by other financial entities, there is even greater need for ensuring that effective policies and practices are put in place in this regard. Even the G20 finance ministers and central bank governors are focusing on risks arising from third-party dependencies. The Reserve Bank has taken a slew of measures in recent years with usage of advanced analytical and surveillance tools, along with techniques like phishing simulation and cyber reconnaissance exercises to push for enhanced IT and cyber security governance processes in banks as well as in other supervised entities. In the context of growing exposure of our regulated entities to various risks from dependencies on third parties.
बिल्कुल, तो ये थे शक्तिकांत दास, आरबीआई गवर्नर, ग्लोबल कॉन्फ्रेंस में बयान देते हुए और भारतीय बैंकों के हालात पर बात करते हैं। और उनका कहना है कि ग्लोबल बैंकिंग सेक्टर में जो दिक्कतें चल रही हैं उसका असर भारत पे नहीं पड़ रहा है। भारत के एनपी की स्थिति मजबूत है, कैपिटल की स्थिति मजबूत है और आगे के लिए भी उन्होंने बैंकों को ये सलाह दी है कि वो अपना रिस्क मैनेजमेंट सही तरीके से करें। तो ये कुछ अहम बयान वहां से आ रहे हैं और लगातार हम आपको उसका अपडेट भी देते रहेंगे।